Lots to review today. We saw oil prices plunge back to around $66 a barrel, and this has obviously been a really important and key level for oil going all the way back to the year 2019. We can certainly see that it has acted as resistance on a number of occasions and certainly has acted as support, really going back to the year 2021. And so here we are again with oil kind of hitting the $66 level, and we'll go over oil in just a minute, but let's just take a look at what happened in Germany today with 10-year interest rates. The 10-year in Germany today goes up by 30 basis points in one day. That's a really big move. That would be the equivalent of the price falling about 2.5%. So obviously a very big move in rates, and it wasn't just in Germany that we saw the same thing happen. We saw rates in Italy go up as well by 27.5 basis points, and we saw rates in France go up as well by nearly 26 basis points. So we really had huge moves in Europe today. Following news that, Germany is going to be spending a lot more on defense. They're going to be trying to get their economy going. Even the British 10-year rose by about 14.5 basis points today. I mean, these are monster moves when you look at the type of moves that we're seeing across interest rates in Europe. And then, of course, add to that we've seen the Japanese 10-year yield rise significantly, even just going back to where we were in October. We've gone from around 80 basis points to 145 basis points. So we're just seeing this really big move up in rates. And at the same time, we've seen rates in the U.S. come down pretty sharply. And you really have to wonder how much can rates in the U.S. really come down when we're seeing these big explosions taking place in other parts of the world. I mean, historically, I went over this today with subscribers as well. Historically, when you think about bond yields, they all tend to move together. Occasionally you'll get, some yields that will, go in a different direction. But for the most part, one would expect if bond yields in Japan are rising and bond yields in Germany are rising, you're going to probably see some movement in rates here in the U.S. as well. This is what it looks like on a daily chart, and if you go back over the years, rates just tend to go with one another. And really, if you just look at this over a longer period of time, yields in the Western world at least tend to move together. So it would be really surprising to me to see U.S. rates diverge in a meaningful fashion from where they're going in Europe. And whether or not they go higher in Europe is still open for debate. Obviously, today's movement was just one day, and we can easily see these rates come back down some. But clearly, rising rates in Germany today was obviously, I think, the biggest and most interesting thing, and that led to a really big move in the euro. The euro has been stuck for months around this 105.20 region, and finally today it moved above it. You can see we started testing this region back here in December, and now there's been a clean breakout above that level and really a very rapid rise. And you just don't see these types of moves in FX very often. And so when you see them happen, I think you appreciate it a little bit more how violent that type of move is. And clearly, you can see that there's a big level of resistance around this 108 area. And really, we could be looking at a euro that's not only heading back towards 109 or 110, but potentially going back to around 112.5 to 13. And even when you look at the British pound, that's also been the case. We've seen the British pound move back up to around 129. We've seen the USD CHF also show signs of strengthening. It's been moving down. And, finally, the yen today actually started to show signs of maybe materially breaking below this 149.30 region. And a lot of this, again, it goes back to, what we've been seeing, which is that, rates in Europe rising pretty dramatically today, and rates in Japan just trending higher. When you look at the spread between a U.S. and German 10-year, the spread is just absolutely collapsed, and this is what's driving, the euro. This is what's driving the euro higher versus the dollar, and this is one of the reasons why, you're seeing this taking place not just in the U.S. but also in Japan. Here you can see that as well. That's been leading to the Japanese yen strengthening. And really, it makes you wonder, if we're going to start seeing the dollar really materially depreciate, how is that going to really force, you have to think that why would oil really go down? I would think that, again, a falling dollar would probably result in oil prices going higher. And it's not necessarily because, people are thinking that the U.S. economy is going into a recession here. It could very well be that, money is just reallocating as potentially investors maybe get more bullish on the European region if indeed there is going to be big spending over there. The other question, obviously, is can the economies of, let's say, Italy and France, and Spain, for example, who have much higher debt burdens, can they carry the load of these higher interest rates? I mean, Spanish 10-year today was also up on the day about 25 basis points. So again, this is one of the bigger questions, and we just really won't have the answers to it for some time. But again, if the dollar is going to be weakening because of what's happening overseas, I really can't imagine that you're going to really see the oil prices break down in a material way. And on top of that, oil has really found the floor for, like I said, about 3 or 4 years now at this a $66 region. And whether it's because it's the U.S. refilling the Strategic Petroleum Reserve or not, I really couldn't tell you. But whoever it is, they're obviously large enough that they're dictating and deciding whether or not oil breaks down. And if oil does break below 66, it's because that buyer who's been supporting it is no longer there. And, that could start leading us back down to much lower levels, perhaps 52, perhaps even 42. It's really going to depend upon what the dynamics set up like. But right now, I think until proven otherwise, you have to respect that $66 level in oil. And then also we saw copper prices really surge today as well. Copper moving up right towards this upper end of the range. This has been resistance now around 480, 485 for some time. So we need to watch that. And this is important because, we just got some economic data this week, which showed, prices paid, services prices paid 62.60. This is the third month in a row now that we've seen, ISM prices paid services up around 62.60. And then, of course, earlier in the week, we had the ISM manufacturing prices paid. So, and that came in high as well at 62.4. Estimates are only for 55.8. So, we're seeing as evidence that prices paid are going up. And then on top of it, you're talking about copper prices going materially higher. And you've also seen things like lumber also going materially higher. I had drawn in at one point what looks like, a cup and handle type of pattern here as well. It looks like we've clearly broken out. So, this is going to only make it harder for, input prices and prices paid. And so you got to think that, this is going to be a big weight on inflation. Couple that with interest rates going up globally. Hard to imagine that the 10-year yield is really going to collapse the way that some people are thinking it is. And when we look at the 10-year yield a little bit more closely, I mean, you can see here, this is a 61.8% retracement level. We're just about be above it. But really more importantly is that, we came down to and tested this level of support yesterday around 413, and we moved right back above it. And now today it looks like we're trying to get back above this downtrend that's now been in place since October of 23, where we tested it once here. We failed. We moved back above it, came back below it. We're testing it again. Even if you see, decent, even if you get decent initial jobless claims tomorrow, that could be another reason why we see rates move higher. And then, of course, on Friday, if you get job numbers that are, around expectations, you could, and you see wage growth as expected, then you could make a case for why rates could go higher. So, I mean, it's quite possible that by the end of the week, you see a 10-year back up towards around 450, and everyone who's been screaming about rates melting and going to zero again will probably become very quiet. And so, again, I think there's fundamental reasons for why rates have gone higher, and I think there's fundamental reasons for rates to continue to go higher. And in terms of stocks today, I mean, really nothing going on here. We're just really trading with the headlines around tariffs. And plus, on top of that, we're in a negative gamma regime. So, it means that basically this is a one-way market. If you start going up, you're going to probably keep going up. If you start going down, you're probably going to keep going down. And that sort of makes the market a little, and also obviously in negative gamma means you're going to be a lot more volatility in the market on a daily basis. And that's basically what you're seeing at this point. I don't really think there's much new to talk about here. We basically have been in this range, call it 5,800 to 6,100 now for some time. And, the put wall has moved down to around 5,700. So, there's an opportunity here for the market to break lower, but as of right now, at least, it's not ready to do that. I think we need to see a little bit more evidence that maybe inflation is still a problem. And we're not necessarily, at least if based on ISM services, it doesn't really seem like we're heading towards a recession. And the other interesting thing today that I didn't touch on, which I should have, was that this S&P Global Services number, which everyone freaked out about, 2 weeks ago when it came in at 49.7, that came in at 51 today. Yes, it was weaker than, last month's numbers. Initial estimate was all the way down here at 49.70. So this is a fairly big, upward revision, and kind of probably makes people feel a little bit better, knowing that the services sector is not in contraction. So I think that's pretty much where we are right now. Anyway, please remember to subscribe to this channel, like this video, share it with your friends. You can find more free content in my community section as well. And I also offer a member area as well where I put videos up every single day of the week. Anyway, have a great night, and we'll see you again soon. Bye.